5 years ago, when the student housing asset class was in a sort of earlier stage, the investors were looking for basic metrics, so supply-demand or supply-demand dynamics, the growth rates, the demographics, and we had less players, less capital, less competition, so the basic metrics were quite okay to make a decision over. However, now when we have a more mature market with more players, with more capital to be deployed, the investors look at more detailed data to back up the decisions, or later on the valuation. So it's not only the basic metrics, it's also the customer preferences, the preferences of the city hall, urban planners, pipeline in the city, distribution of the demand generators in comparison to the supply in purpose-built student accommodation, how far they are from each other, as this is the second most important factor for the students when they opt for structured accommodation. So it's much more into details. The investors are much more careful as they deploy much more capital in these days. Well, UK is the most mature market in Europe and remains so, and there are still opportunities in the UK. I would say that continental Europe is rather different, so it's a young, early stage with probably more rapid growth, not only because it's going from early to mature times, but also because the destinations in Europe open up more, do more for receiving more international students on a country as well as city level, so they have more English taught programs, more destination marketing, less regulations, and this way they sort of make extra mile. Whereas UK has a certain uncertainty about how the international students are welcome, and therefore the continental Europe now represents a better growth opportunity than UK, but still UK is by size the biggest opportunity, but not so much in terms of growth.